this is something that Gen Z looks at like, oh, I could buy 0.001 Bitcoin, or I can buy 280 meme coin tokens. And a Bitcoiner is not someone that holds Bitcoin. A Bitcoiner is someone that is a participant of the network. And you can only be a participant of the network if you hold at least your own keys. Take it slow. Everything that you do rushed in Bitcoin is probably a bad idea. Do it in a way where you feel comfortable. And only when you feel comfortable of recovering your Bitcoin, of sending Bitcoin, of receiving Bitcoin, then maybe you move a little bit more Bitcoin on there. Imagine you have a house and a plot of land that is 21 square meters only, and you want to fit the whole world. The whole world really wants to be in those 21 square meters.
Alrighty guys, welcome back. Today we have Rob and Seyr on the show, someone that's doing a daily Bitcoin podcast. A lot of Bitcoiners know who he is, so he needs no introduction, but just say a quick hi to the camera and share your personal story. Welcome aboard.
Hi, thanks so much for having me. Yeah, like my personal story, I don't know. I was a software developer before. I was an account manager in an IT security company before. Kind of a sales job, but also software developer's job. So like I did the human side of the business, and I did the technician side of the business. And since, I don't know, 2 years, something like that, I'm more and more interested in doing actually Bitcoin things. And I'm trying to figure out how I can contribute to Bitcoin. And almost 1.5 years ago, to the point exactly, I decided to go all in and go with all my power into Bitcoin, and started the daily Bitcoin podcast. I'm doing content now for Bitcoin since 3 years. But like people started noticing me probably around like the last, I don't know, 12 months around that time. And yeah, that's what I do. I just talk with a lot of Bitcoiners. I'm a co-founder of Microseed. We're doing a self-custody, like metal backup thingy. And yeah, doing more and more into Bitcoin and just helping out the community.
I've been following you for quite a while, and you first sort of started on X and Twitter, and you were just doing tweets, replying to tweets, setting a challenge to reply to as many tweets as possible, sort of just push Bitcoin on there. What made you pivot from X to now YouTube and doing podcasts? Because that's a pretty big pivot.
Yes. So there's a tactical thing, and then there is just the fun thing. So the tactical thing was I went to conferences, and everyone, like some people already knew like Rob and Seyr, the handle, but nobody knew my face and how I looked. So like when I told them, oh, I'm Robin, then they're like, oh, I've seen that Twitter account. But they did not recognize me. So the tactical thing was like, I wanted to be as deep in the community as possible. And I was like, okay, like I should show my face. Like that was the tactical thing. So I was trying to figure out, should I do TikTok videos? Should I do long form? Should I do short form? I tried for half a year, every kind of different video format, that I possibly could find. The funny thing is I did not find one that I really liked. And then one day, and the podcast didn't came in my mind. It was so funny because like podcasting is so obvious to do as a video format, but it was not in my mind. It was not something that I was like, oh, I should do a podcast, because I thought I need to be a huge personality to be having a podcast, because I only watched huge personalities for podcasts. So I was like, no, I should probably start with doing like solo episodes and like TikTok videos and stuff like that. And then my girlfriend kind of said like, oh, why don't you start a podcast? Because you already talk to Bitcoiners online. Like at the time, I already had online meetings with Bitcoiners, like with you, and just like talked with them and just had a conversation. And I was like, I could probably do that. And she told me like, yeah, you should do that. And I was like, okay, let's start that, because then I can cut out shorts from that, and it's a nice format. And so I basically, from very simply said, I took what I already did and just pushed it on YouTube. And this was kind of well received and people liked it. And so I did it more and more. And within like 4 months, it was so successful that I got my first sponsor, and then I decided to just go all in with my thing. But yeah, Twitter was where it started. Twitter was the fun where I did every single day 5 to 12 tweets. So it started with 5 and ended up with 12. Now I'm back to 5 actually. And this is it's still the most fun for me, like going in the morning, sitting down and seeing like, oh, what are the 5 tweets that I can send today? What are the topics kind of, again, staying up to date with where's the community, where's the news cycle. And then just going ahead and tweeting that out and replying and having wars on Twitter on like different topics in Bitcoin. This is still the most fun. My Twitter channel is still the biggest channel I have, even though my YouTube channel is soon catching up. So I think my YouTube channel will probably be bigger soon than my Twitter channel. But Twitter is still like, it's so fun to do Twitter and to be on there.
Yeah, you should create your own meme coin, because I feel like you'd be able to gain enough hype and traction. You'd just be on Twitter, 12 posts a day. Come on, pump the price. But I'm glad you're on Bitcoin's team, so that's good. You're sort of living out a lot of Bitcoiners' dream in the sense of you're not only stacking Bitcoin and living on a Bitcoin standard, but your work is to pump out more Bitcoin content. So I think you're almost an inspiration for a lot of Bitcoiners when it comes to, hey, you can actually just leave your full-time job. And if you can find a way to create value for other people, you can essentially work for yourself and then just pump all those profits into Bitcoin. Could you maybe share just a little bit of how that decision was not only difficult initially, but how rewarding it was to make that shift?
This is, we could make the whole podcast on this. I'll keep it brief because I think the main thing for me is when you have already something existing, like you already have a career that you have been in, and I've been into the career already 6 years. Even though I'm young, I had the IT security job where I was programming, but also on the client side and helping customers and clients to have our software solution implemented. I was doing that for 6 years, and I liked the boss. I liked the people that I was working with. I liked the product. I was just not super psyched to be in IT security. It was just not like IT security isn't my passion, so to say. And so when this Bitcoin thing came around, and I noticed that in my free time, I'm spending a lot of time on this Bitcoin thing, and I created content on Twitter and even like a little bit on YouTube already for like 1.5 years and didn't get anything for that. This changed around Christmas 2020. 2023. Christmas 2023 was where it changed this, where I got the first time the notification of Twitter, like, hey, you are monetized on Twitter. And I'm like, wait, what? Like, how? Like, I get now money for like shit and tweeting shits all day long. And this was kind of for me a turning point. It was also a turning point around the same time, actually the same Christmas, Jeff Booth agreed to be on my podcast. And I always looked up at Jeff Booth like a god, god figure. And I was like, he comes on my podcast. That's crazy. So like there were like multiple signals just from the market where I'm like, oh, this could be bigger. Like, I could maybe make this a full-time job, but there were no guarantees. Like there was not a big company that said like, oh, we'll sponsor you for the first year or anything like that. There was some experiment like, hey, for the first 1-2 months, we'll give you that money and maybe it works out. So there was nobody that really pushed me and nobody that really sponsored me. And, Bitcoin was anyways it was just me. Like that the only person I knew in Bitcoin in my private life was me. And so it was a big step for me because, I didn't have any big role model in my own personal life. I didn't have anyone that said like, oh, you should do this, you should pursue that. But I had something weird saying like, this could be something big. And I also want to do that. And the main thing that really pushed me over the edge was this thing of like, if I look back, like 30, 40 years from now, and I'm not doing that, will I regret that? And I'm like, yeah, of course I will regret that. Like I was 25 years old. Now oh gosh, I'm 27 already. I was 25 years old when I got in there. And, when you're that young, you don't have a lot to lose. You really don't have anything to lose, actually. You think your whole world might come to halt and you lose everything, but you don't have anything. I didn't had kids. I don't had a family. I didn't had a house or like a company or anything like that. I was just like a guy who had nothing and was afraid to lose everything in that process. So at some point I realized that, and I was like, I'll just jump now. And, of course, after 2 months, the only sponsor I had was saying goodbye to me. And I've luckily found another one, and it just kept going. And I was just hustling like 80, 90 hours a week to make this thing work. And somehow it did work out. It was a big moment for me. That it actually worked out, and I'm so glad that I can inspire someone else to do the same thing. Even though I always want to make sure to say this is freaking risky. Like I only did it because I didn't have anything to lose. Because you literally can stay after 1 year and say like, oh yeah, I have a podcasting business that doesn't make any money because nobody wants to watch my content. And I also lost my previous job, and I went through my savings. So it's not something that I would recommend someone that has something to lose. But if you have nothing to lose, like why don't you like just go ahead and do it? Especially if you're young. Like if you're under 30, what do you have to lose? Like you can just go ahead and do things. Like if you I don't know how old you are, like 20, 25, I don't know. You can basically just still live with your parents and just like do the thing and have no expenses at all. Like, I mean, this is a mindset I got from Gary Vee a lot. He's like, you have to see what you can sacrifice, and you should have the humility to sacrifice the fancy apartment, the fancy car, the fancy things, and just go back to your parents' basements and work your ass off to make it work. And then you can repay your mom 10 years later with retiring her or buying her a nice house, like whatever. Like you can have the humility, because what actually stops people from going through the sacrifices they have to make to make a nice thing work is just their own ego, basically. So it was a little longer than I thought, but it's basically my message is you can just do things, and I hope I'm an example of that, where I didn't have any fame, I didn't have any money, I didn't have any experience or knowledge. I think I'm not the most well spoken. English is not even my mother language. Like I had a lot of people telling me like, oh gosh, I don't even understand what you're saying because you have such a weird accent. So I didn't have anything going for me. I just was hustling every single day, and it kind of worked out. So I think I'm an example of, if you have nothing, you can still make something.
Yeah, I think that whole idea is like sort of what brings a lot of people to Bitcoin. It's like, I have nothing to lose. I hear everyone around me, like especially for me, like I'm 21, all my peers are just going, I have no money, I have no this, I can't buy a house. And it's just like, wait, so you're telling me if I don't take the risk, that's my future? So to me, how is that a risk? Like, what am I going to lose? Because I'm even talking to people that are quite a bit ahead of me in life, in age, and they're still telling me how much of a struggle it is. My bills are too much. I can barely afford the house. I had to sell the house. I'm renting now. I have $10,000 in my bank account, and they're like in their 40s, their 50s. And I'm going, wait, so if I don't take a risk on Bitcoin, this is potentially my path. And I just go, what is there to lose? Like, there's a reason now that I tell people, hey, I'm going to try something different and do an alternative way. And you can tell me about all the risk and, hey, I did it this way, you should do it this way. It's like, there's nothing to lose here. Like, I feel like this is the one chance to make an impact on the world and do an alternative system. And to me, that's Bitcoin. Like, I'm going all in on Bitcoin at 21. And it's like, people think that's crazy, but I'm like, what you're doing is crazy. Like, you're trying to save in a dollar that's getting printed. How is that not insane? Like the definition of insanity is constantly doing the exact same thing, expecting a different result, and they're all just living in that. So I don't know what your thoughts are on that, but how is Bitcoin sort of a similar thing where it's like, hey, there's actually not a risk here. Like it's almost like just taking a chance. Like it's almost just switching to an alternative system. Could you maybe explain how this is an alternative saving system and not just an investment?
I think you brought up something really important about risk in Bitcoin. And there's like two sides to that. There's like the crypto gambler Deegan that says like Bitcoin is the most boring thing and the safe haven that we can have. And then there is the commercial, normal TradFi investor that says Bitcoin is the most riskiest thing ever. And it's a good place to be because both are completely wrong. And at some point also a little bit right. If you have, and it depends on how you look at it. There's something called risk in TradFi, and they are not saying about risk of it being vanished. That's the risk of it going up and down. So the traditional financial space confuses risks with volatility. And if you say volatility is risk, then 100% Bitcoin is risky because it's volatile. Like that's like non-debatable. It gets less volatile, but honestly, I think it has a good chance of getting more volatile in the future because I think we're just hitting the S curve. We're just hitting the fun times in Bitcoin in the future. So if you say risk is volatility, then like 100% absolutely true. Bitcoin is the most riskiest, not the most riskiest thing, but it's a risky thing that you can possibly do. And then the other side of it, what is the risk of it being vanished? What is the risk of it making a fundamental mistake? And the risk is, the closest to zero from any other asset. Like if you have a scale of 0 risk to 100% risk, Bitcoin is the closest asset to 0% risk that it possibly can. It is not zero because nothing has a 0% risk, but Bitcoin is the closest thing to it. If you think about any other asset, and we can go through them, if you think about stocks, they have huge inherent risks. They have the inherent risk of the management team just having bad decisions, the management team dying, the management team saying something really, really bad. We had, I was a Tesla investor, so I know a lot of examples in that. When Elon Musk went on Joe Rogan and smoked something on his show, the Tesla stock went down 20%. You don't have that with Bitcoin. Bitcoin doesn't go 20% down because Michael Saylor smokes a joint with Joe Rogan. Like it would be super fun to see that, and Bitcoin wouldn't do anything on that day. I mean, it would be maybe do something on that day, but it wouldn't be related to that episode. So there's no CEO, there's no management team risk, which is a huge risk for every stock investor. And most people just don't think about that risk. Most people just don't, they just invest in a company and they don't think about what is the management team going to do. When I was a stock investor before Bitcoin, and I did a lot of that, the main thing I did is looking at all the conference calls. I looked at all the podcast interviews, the CEO, the CFO, and all the C-level people that I could find before I invested in a company. Nobody does that. Like you have to know the people that lead the company in order to figure out who to invest in and where to invest in. Before you do that, you cannot even decide if you want to invest in them or not. And so, oh gosh, I was was quickly alone. I was for thinking you might be gone. But yeah, like this is if you just look at stocks, this is one major risk. And Microseed actually made a great video, and I think he talked like 1 hour just on what is the risk of owning a stock. And he went on in a big tangent on all the risk factors. As a publicly traded CEO of a publicly traded company, he must know all those risks. There's those 10Qs and 10K reports that every publicly traded company in America has to file. I encourage everyone to go on any company, like, I don't know, Apple, Amazon, all of them, and go to the risk section of those reports and then read through them and you will know they have so many risks. They have to list all the risks associated to the business. And then you really get to know how risky investing in a stock is. There's so many things that can go wrong every single day. And there are many examples of really big stocks that all of a sudden crashed down to 95% and they never recovered and they went bankrupt. There are many examples of that. So that covers stocks. Then what else do people invest? I think in Australia, housing is super, super popular. Real estate is super, super popular. What are these risks associated with that? You have the risk of the neighborhood changing. You might invest in a neighborhood. How does the neighborhood look in 10 years? You don't know. Like there could be a wrong politician that has the wrong rules and brings the wrong people in. And all of a sudden your neighborhood looks like shit. Like this is a real possibility of a risk of a politician bringing the bad neighborhood in there. You have the risk of some nature thing happening. You have the risk of so many different things that can go wrong with a real estate property because it's physical. Then you have the risk of like being taxed heavily, the property taxes. If it just goes up 0.5% each year, man, you're getting screwed on the property taxes because also the property value goes up, and all of a sudden you you have to get on debt to actually pay the property tax because you don't have the money to actually pay the property tax because you don't have the cash value of the property. So there are so many inherent risks with properties and real estate that I'm saying, like, how do people see that as a non-risky asset? Like I couldn't, if I would buy go through the decision tree of finding out the perfect location for a real estate property. Like that's fucking impossible. Like how do you decide if a city, a country develops great in 10 years or not? Like this is pure speculation. And so real estate as an investment is horrible. It's always a horrible financial decision. It's usually always better actually to rent in case like. And I say that very cautiously because I'm young and I also want to own my own home at some point. I want to own a home with like 40, 45, maybe 50. And this is not because of financial reasons, just because I want to have a roof for my family that I can rely on. And that will always be there, and it's kind of the security for the kids. But outside of a life decision, for me, real estate is always a horrible financial decision. I mean, maybe if you live in in a country where you have the possibilities to have a very great and a loan for like 2-3%, and maybe you only have to do a down payment of 2-3-4-5%, then maybe it can actually make sense financially. But like I'm not a financial advisor, so like you better check with someone. But like if it's a very low down payment and a very low interest rate, it could make financial sense to do that. But outside of that, in most cases, it's actually better for renting and wait till you actually can afford with your Bitcoin. And we can go down that rabbit hole where we had 2017. A few hundreds, I think even like 3,000 of Bitcoin you needed for an average home to buy, like with Bitcoin, an average home. Now we are down to 4 Bitcoin. And in 5-10 years, it will be 1 Bitcoin, 0.1 Bitcoin, maybe even beyond that. So if you're saying like, oh, I'll stack now 1 Bitcoin, now I cannot afford a home. Yes, you cannot afford a home, but in 5 years, you might can. And so maybe it's better to now rent for the next 5 to 10 years and then buy the home with just a portion of your stack. So that covers real estate. We went to stocks, we went real estate. Then there is gold. People bring that up. And yeah, gold has great properties. Like gold has great inherent properties. It has none of the risks that, for example, a real estate property has, or none of the risks that a stock portfolio has. And gold, honestly, might be a great side investment. I love, like, I think James Jack is also, I think he is also an Aussie, like James Jack. And I had him on the podcast, and he talked about the strategy having a Bitcoin as his main asset, but having gold as the cash asset, like the 5, 10, 15% of your portfolio, to have quick cash, because Bitcoin, because gold has not the volatility associated that Bitcoin has. Obviously, it's also not like guaranteed. Gold can have volatility, can go down, but it's been around for so long, and it's the biggest asset you can possibly buy. So it's also it's the hardest one to move in any direction. And central banks and those have it, so it has some security also from that side. So this is an interesting one, but it is not one where you can expect any good, any great performance. And that's what I usually say. Like, Bitcoin has the upside of Nvidia, Tesla, and all the growth stocks, and actually a better upside than them, but it has the security and the decentralization of gold. It has those risk properties of gold. And if you look at Bitcoin as a combination of risky tech stocks and gold, it makes a lot more sense all of a sudden, because you see that Bitcoin gets adopted faster than the internet currently, which makes it grow very, very fast in the long run. And then also it has the risk portfolio of gold, which is not very risky. Like, there's no inherent risk to Bitcoin. There's no threat to Bitcoin. And I think that's the main message here with risk. Now, I think I haven't answered your question, but I also forgot your question. But you mentioned about risk and Bitcoin, and I want to make this very clear to people that Bitcoin doesn't have inherent risk. It only has volatility risk, and those volatility risks are the risk that you get. Like, the volatility is what you pay for the main upside of Bitcoin. If the volatility would be very low for Bitcoin, there would also be not a chance of a 5x, 10x, 100x, 200x, as I see it in the future.
Yeah, I think it takes like the best attributes of all assets and just combines it into one. Like, as a store of value is gold, but then it also is like digital real estate, but then it's also got technology. So it's all alongside as Apple, Nvidia, Microsoft. And it's just interesting that it can really take the best part of each asset, combine it into one, and really act as all those things. And so I think when people talk about, 900 trillion or 1 quadrillion worth of things in the world, Bitcoin really can eat into most asset classes, even to the point where it's eating into collectibles, for examples, eating into, say, expensive art. People hold art not to hang on their walls, but they put it in a basement with a big lock, hoping that it'll be worth more in the future, so as a store of value. And so could you maybe deep dive into how is Bitcoin as digital land? So something that's like cyberspace, digital property, where it's everyone's going to end up fighting over these very scarce blocks of land, digital land. And how does that supply squeeze look like when people start viewing it as that?
You have only this 21 million, and this digital scarcity for Bitcoin is something that we've never had. We never had anything that was remotely as globally reachable and accessible for 8 billion people around the world, and at the same time be extremely scarce. So people cannot access your real estate in Australia all around the world. People might not have the possibility to open a stock brokerage and buy Tesla, but they can all access Bitcoin. Everyone can access Bitcoin across the world. You just need an internet connection and a device that can access the internet. That's all you need to access Bitcoin. And actually in Africa, there's even projects where you just need a phone and you can buy Bitcoin with SMS, I think it's called, like messages basically. And you can just message someone and you get Bitcoin, and you can send and receive Bitcoin with that. It's not the best way, but if that's the only way, like, do that. And so we have the we have now for the first time ever an asset that is globally reachable and accessible for everyone. And each and every one has an incentive to go in there. And an Indian guy that just comes up and earns like 100, 200 euros per month, he has a major incentive to be into Bitcoin, because this might be his ticket out of poverty. This might be his ticket to reach up in levels. But then the same asset is very nice also for Jeff Bezos, for Michael Saylor, for the elite of the world. So we never had an asset that is extremely attractive for Jeff Bezos, Michael Saylor, and the Indian guy that earns like 200 euros a month. They both really want that asset, and they both have the same chance and the same conditions and the same thing for everything. So we have an asset that is global accessible. 8 billion people really want it, even though they might not know it yet. And then we have only 21 million slots available. And just for the few people that are very new to Bitcoin, if there's someone listening to that, you can go get those 21 million slots divided into 100 million more slots for Satoshis. And down the line, we probably have to divide it even further, because one sat will be worth too much, and we will have to divide one sat into, 100 Nakamotos, or like whatever we are deciding to name it, and whatever the change will be. So we have the situation where 8 billion people want to come to an asset that is reachable for everyone, and it is digital scarce. Imagine you have a house and a plot of land that is 21 square meters only, and you want to fit the whole world. The whole world really wants to be in those 21 square meters. And you now have the possibility to buy a small piece of that land. And 8 billion people want to buy a small plot of this land in the near future, and there's only 21 million slots. Like if you know that, you will go ahead and buy as much of that plot of land as possible. You will say like, oh, this 1 square meter, this half square meter, this whatever square meter, this is mine, and I will not give it away. So those people who are early, and understand that as soon as possible, have a major advantage, because they see like, oh yeah, like those are the 21 square meters, and I can now buy a small piece of that 1 square meter, and everyone will bid me out of that one day, and I just can give 10% of my small plot of land that I bought there, and be retired for the rest of my life, and be good for the rest of my life. I can buy all the cars and houses and everything that I really want to have, and live a great life with my family. And like, this is the main reason for me for the scarcity and the digital Manhattan kind of comparison. Because people underestimate that actually everyone will want a plot of land, and there's only like 21 square meters available. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC-free Bitcoin. That's why I use simplemining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign, and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address, and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation.
Yeah, it's interesting when you hear like there's potentially 4 million coins or whatever the number might actually be that's already gone. So it's like a chunk of this very scarce thing has already been locked up forever. It's not coming back onto the market. So 21 million is no longer 21 million. It might be 17 million. It might be even less for wallets that have been lost. And this is a really scary idea for people when it comes to self-custody, because there's no one to call if they lose the words, if they lose access to it and they've done something wrong, they've lost the 24 words, but maybe they've lost the passphrase, maybe they've lost some element to put this puzzle together to unlock the Bitcoin. And so could you maybe just speak into why people that are new to the space, that are just holding it on an exchange, why is this something that's so important to consider self-custody, and maybe go into what does self-custody actually mean? Because I hear older people now saying, how can you turn something digital online to offline mode? I don't get it. Like, what does Bitcoin on ice mean? It's like, oh man, like, could you maybe deep dive into why self-custody is really important and what actually is self-custody Bitcoin?
Yeah, cold storage has nothing to do with the temperature. It's like, and so I think if you really want to be involved and associated with Bitcoin, you should be a Bitcoiner. And a Bitcoiner is not someone that holds Bitcoin. A Bitcoiner is someone that is a participant of the network. And you can only be a participant of the network if you hold at least your own keys. Like, this is the minimum requirement for someone to be considered being a Bitcoiner. If you don't even sign a transaction on the network and have your own keys with receiving addresses and sending addresses, like, then like you are not participating in the network. You just hold an IOU of a Bitcoin, and you might be considered also Bitcoiner because you theoretically hold Bitcoin, but self-custody and taking advantage of having physical delivery of your own Bitcoin. And with physical delivery, I don't mean like you get like a coin or anything like that. You basically just hold a key. And how this works and how this looks is very easy. You have signing devices and you have a way to back up those signing devices. So the signing devices hold your private key, and with them you can sign a transaction. And then you can also like create addresses and all of that. And I want to keep it very simple. If someone is currently not self-custodying, I really urge them to start doing that. But before that, I even want to urge someone to do one step further. It's if you do self-custody and you think about what I start over. This is there's something more important before that. When you have an asset like Bitcoin, it is so new, and there's so many new companies in the space. You have often the thing that happened that those companies can go bust. We have seen it with Celsius, we've seen it with Mt. Gox, we've seen it with so many other companies. And I'm not saying this will happen to Kraken and Strike and all the other companies. It probably won't happen to them, but there's a possibility always that a central party can fail. They can do something wrong. They can make a mistake. They can maybe just bet on the wrong horse. Like they can do a mistake where we are not sure what they're really doing. And so to take that risk out of it, you have to take it on yourself. Like you have to be the person that actually holds the keys. And if you don't have that, you're always on the mercy of someone else. And this is something very important to understand, especially in Bitcoin, because you might need it one day. If you have, how should I say that? You have the possibility to first time ever have your own keys and in your own wallet, and you can send it and you can receive it and you can hold it, and nobody else can do anything for that. For example, if you have a bank account and you want to do a transaction internationally, if, for example, you want to send me from Australia to Europe money, it's not only very complicated because you need a lot of information, but also they can just say no. They can just say like, oh, like, no, we don't like the transaction. It's too much. Like, oh, it seems weird. It seems like it's not a valid transaction. And they can just say no to the transaction. And so we have the situation where we have a permission system all across the world. And this is the main thing of Bitcoin. And I push it down to basically 3 pillars. If you have Bitcoin, you have 3 main pillars that you get when you adopt the asset. The first pillar is the number go up. You have basically the wealth that you accumulate from Bitcoin. And the wealth is really great because you buy this thing and all of a sudden, like, it gets twice as much worth. It gets 3 times as much worth. And you're like, oh gosh, like I bought Bitcoin as low, I think as like 5,000 or 6,000 euros. And now it is like 100,000 euros or like whatever the dollar amount of that is. This is a major uptick in net worth, in purchasing power, and all the things that come with that. And this is amazing. But then you have the second pillar, and the second pillar is kind of the most important one, the one that holds everything together. Because what happens, for example, with Mt. Gox is you bought Bitcoin, you kept it there, and now they're paying people back. But they're not paying people back in Bitcoin. They're paying people back in the dollar amount that was worth back in the day. So they getting screwed over drastically. Like 2013, you bought $1,000 of Bitcoin, and you probably got like hundreds of Bitcoin. I don't know like what the price was 2013, but it depends on where you bought it. And you got like a lot of Bitcoin for that. And now you're not getting those hundreds of Bitcoin. You're getting $1,000. Not even that. I think you get only 70% of that. You get like $700 or something like that for that. And so for them, for everyone that was involved in Mt. Gox, they are now getting a very painful lesson, a very expensive lesson in why to do self-custody. So this is for me, the first reason why you should do it, because there's inherent risk with central parties, with central authorities. Then the second thing, as I said, is the permission system, where you don't have to ask for permission. You can just do things. You can just I can transact with you and you can transact with me, and I hold my own keys. Then there's the third aspect of it, that you don't want to contribute to the fiat system. If you have Bitcoin wrapped around like some exchange or some fiat institution, you still have a KYC process. You still have just an IOU. And so the self-custody aspect is the middle finger to the fiat system. This is the one where I'm like, I hold my own money and I don't want you to even see it. If you say, oh, I'll do a job, but I demand to be paid in Bitcoin, nobody knows that you even have those Bitcoin, and you don't have to declare that at all. Like, you just have those Bitcoin. I mean, I recommend to be good to the tax guy because they can come and take you. But those are your Bitcoin, and you just get them and you can spend them as you want. And we are building this parallel system where you get to have Bitcoin, I get to have Bitcoin, and we can transact freely onto each other. It's the peer-to-peer vision that we always wanted to have. So this is an extremely important point, I think, to have self-custody. On how to do it, I think this would be a whole nother podcast. That's why I went more into the why. But basically, just get the things that you need for that, a signing device. And for backing up the seed phrase, I recommend Microseed, obviously, as it's my company. But this is not like the important part is that you do self-custody, and that you do run your own node, and that you choose what you do with your Bitcoin. Because if you're not doing it, someone else will, and someone else might not be acting in your best interest. So this might be even like a fourth reason where if you are not doing the self-custody and your own keys yourself, someone else acts in your best interest, but they might not have your best interest at heart. They might have their own best interest in their heart, as most people tend to have. So if you give away the control of your Bitcoin, they might screw with it. They might do something that you don't agree with. And having self-custody is the only way that you can ensure that your Bitcoin are actually your Bitcoin and will also be your Bitcoin in 5, 10, 20 years. And you're not getting screwed like the people that are getting right now screwed with Mt. Gox.
Yeah, even recently, like I went to withdraw off an exchange into self-custody. And then they deemed me like a suspicious user, like randomly. And I've been with these people for years. And so they've gone, we're going to withhold your withdrawals until you can prove the address you're sending it to. And I'm just like, they are now putting themselves in between me and a Bitcoin transaction purely because they really own the Bitcoin right now. I just have a number on a screen, an IOU. I don't have access to that Bitcoin right now. Now, I can go down the rabbit hole and I'm sure I can get it, withdraw, and that's sort of what I'm doing. I've been back to forth with them saying, you can't just deem me suspicious for no reason, whatever. So they're annoyed that I'm trying to withdraw off their exchange because they obviously want to continue holding it. Who knows what they're doing with it. But that's just an example. Like, these people are very credited in Australia. They sponsor a lot of our football teams and things. And so everyone goes, they must be safe. But as soon as they realize maybe they actually don't have the Bitcoin I'm trying to withdraw, or they decide, actually, we could probably get some here. We can keep charging them fees by holding it, or whatever it may be. There's always going to be a potential risk when you're trying to dish off that responsibility to someone else. So I think a lot of people are scared of self-custody because it means self-responsibility, but that's not something you should run from. Rather, you should embrace that, understand, hey, I need to take some self-responsibility here, look after it myself, and take it into my custody. No one needs to touch this. Not an exchange, not a government, not a country. No one else needs access except me. And then you can put the proper precautions when it comes to, say, maybe letting, say, your wife or someone that else might need it if you were to be passed away or something like that. But yeah, that's just, yeah, the whole self-custody thing, at first, it really, really scared me. And it was just like, oh, wow, that's a massive commitment. But now it's like, nah, I'm very like frustrated with exchanges and other wallets, and I get very nervous where people are holding a big amount with someone else. It's like, oh man, that's just so risky. Like, imagine they go down and you lose that. It's going to be really hard to get that amount of Bitcoin again, especially as its price runs up. Could you maybe, before we move on to the next topic, just sort of go into why does an ETF sort of fall into a similar realm where it's like, hey, that's not real Bitcoin, that's just an IOU? Because a lot of old people would say, I don't want to bother self-custody, I'd rather just get the price action. What are some, I guess not risks, but why is self-custody superior to an ETF?
And I want to be careful here because I recommend self-custody to people. Like, if you don't know how to turn on a computer, maybe you should take self-custody slow. So there's also the risk of taking self-custody too fast and risking your own Bitcoin. So if the only thing you can do is calling your BlackRock guy and like, oh, I want some Bitcoin, then maybe that's the extent you should do it. You should get educated. You should try self-custody, like for that person that only has BlackRock and he never did anything with self-custody. Maybe the best idea is think about what is the easiest self-custody solution for you personally, and just try it out with a little bit. Like, don't put all your Bitcoin on there. Just like put like $100 of Bitcoin in the self-custody solution and try to send it and get it. Like, that's the first thing I did actually. When I got into Bitcoin on day one, I ordered a ledger. I don't recommend them at all right now, but back in the day I bought them. And I transferred from Coinbase to Ledger my Bitcoin, and then from Ledger back to Coinbase, and then from Coinbase back to my bank account. So I tried to just do it full circle. And I think for the people that are scared of it, or for the people that say, oh, should I do it? Or like, how can I do it? Just try it out. You don't need to transfer all your Bitcoin on there. I actually encourage you to just transfer a little bit on there and then test it out. So a practical thing to do is go ahead, buy a signing device, buy a metal backup device like Microseed, and then test everything out. So go from your exchange or from your like whatever bank account and go transfer $100 of Bitcoin on the signing device. Now go ahead and stamp your seed phrase on like a washer, so you know you don't lose it. And then try to send Bitcoin to another wallet. Try to send Bitcoin back to the exchange and do the full circle of it. Try to send other Bitcoin, do that thing. And then also go through the journey of, what if I lose my signing device? Like, what if I don't have it anymore? Put the signing device back to the side, and you only have now, because you stamp maybe the seed phrase on Microseed on like a washer. So yeah, you have the 24 words on that washer now, and you're like, oh, okay, I have those 24 words now. What do I do? Do you know how to recover your Bitcoin if your signing device is gone? If not, you have a problem, because your signing device could break, like, you can put water on there. Like I have a glass of water here. If I put enough water on the signing device, it will stop working, and then I'm relying on the backup. So try everything out and get comfortable with it. Like, it's not that hard. Like you will just figure out that, oh, okay, this works like this works like this. You can even then try multi-signature and buy multiple signing devices, and just try to figure out how to do all that. And trying and testing and figuring it out is a lot of fun also. It's something new. Like, if you've never done that, it's like, oh, nice. Like, I can put my punch here and like punch things on this titanium plate, a titanium washer. I have like a nice a signing device, like it's like a video game thing. So take it as something fun, new to learn, and take off the responsibility that you have to like put everything right now, and you have to do self-custody like right now, because like people say you can lose all your Bitcoin. Take it slow. Everything that you do rushed in Bitcoin is probably a bad idea. So take your time, take it slow, and do it in a way where you feel comfortable. And only when you feel comfortable of recovering your Bitcoin, of sending Bitcoin, of receiving Bitcoin, then maybe you move a little bit more Bitcoin on there. And then what I also encourage people to do is connect your own node. Maybe buy a Start9, buy a Raspberry Pi, just do something like that, and try to connect those pieces of like, oh, like I have my wallet and connected to my own node. All of a sudden, like I'm fully sovereign and I can verify Bitcoin for myself. It is, I always tell people to do that because of education. You will learn Bitcoin so good just by doing the self-custody yourself, of doing the running your own node yourself. This is the most important thing that you can do for Bitcoin, but especially also for yourself, because you really get to know, oh, what is the up return thing all about? Like, does this matter for me? What settings do I have in the mempool that I can set on my own node? Like, there are many different configurations that most people probably never heard about. And so with all that in mind, take out the scary thing and the pressure and just try it out. It's a new kind of fun thing to do. And I'm also giving a big disclaimer. The security cost of securing your Bitcoin should match your stack. If you have $500 in Bitcoin, don't buy a $200 signing device, a $200 Microseed, and like $100 of worth of more. Like, if you have a stack that is $500, your security cost for securing that Bitcoin should not be $500. But if you have 2 Bitcoin and you have $200,000 into Bitcoin, a security cost for securing that for, I don't know, like $1,000, all of a sudden makes a lot of sense. And so I always say that to people, before you buy a Microseed, make sure you actually have enough Bitcoin. If you only have like $500 of Bitcoin or $1,000 in Bitcoin, stack first more. Like, keep it on exchange. Like, it's okay. Like, if you lose it, it's okay. Or you can also have a hot wallet. I, for example, have a hot wallet on my phone, always ready to go to receive and send some Bitcoin. And this is self-custody, but it's not secure, because if I lose my phone, it's gone. Now you can back up your hot wallet on titanium, and all of a sudden it's a lot more secure, because if someone grabs your phone, he cannot get in there without your Face ID. And you have it backed up, so you can get it. A signing device obviously is better than a phone, but maybe that's a great starting point, because this thing costs $200 and your phone you already have, and then you have a security cost of $200, and all of a sudden you have a great setup already if you have like $1,000 of Bitcoin or $2,000 of Bitcoin. And then if you get to $10,000 or $20,000, you can upgrade along the way, and you don't need, like, I just want to say to people, your stack size matters when it comes to your security. If you have 50 Bitcoin, please have multi-signature, have different kind of vendors, have different wallets, have different setups. Like, don't have everything in one. Distribute the keys somehow, not only locally, but also like maybe even across borders if you have that many Bitcoin. So there are, it's always hard, because if someone asks me, oh, like, what do you have as security tips for securing your own Bitcoin? I'm always pointing people to the Bitcoin way, because they will personalize a perfect solution for you personally, because it depends on so many factors. And it also depends on like your budget for that. And as I said, if you have just $20,000 of Bitcoin, maybe a security budget per year for $5,000 does not make sense. But if you're Michael Saylor and have 10,000 Bitcoin, a security budget of $5,000 a year is like nothing, and you should probably spend more to secure your Bitcoin. So that's all that I will say to self-custody, and do it, test it out. Even if you're 90 years old and you can barely get to the computer, test it out. It's fun. Like you will learn so many new things, and don't put any Bitcoin on there till you're not comfortable. Like, Nobody says you have to put all your Bitcoin out there. Maybe you just keep 90% with BlackRock and 10% you put on self-custody just to try it out. And maybe after a year, you're like, oh, like that's really easy actually. And then you can put 20% on the self-custody. Like it doesn't mean to have like, it's not like a switch where you're either 100% in ETFs and 100% in self-custody. And your actual question that you asked, why is it risky for BlackRock? I don't think that BlackRock will skew you over anytime soon. But there is the major risk that you are still in the fiat system. You are still holding the Bitcoin, not in your own Bitcoin world. You're holding your Bitcoin in the fiat world. And at that point, you're not even a user of Bitcoin because you've never touched the Bitcoin network. You've never signed a transaction. You've never run a node, anything of that. So if the fiat system goes to bust, what are they looking at? If we are right and there's this parabolic move up in Bitcoin, and all of a sudden the fiat system crumbles down, and I talked with Parker Lewis on that, the author of Gradually Then Suddenly, where he says like if one nation state, a G3 nation state, is hyperinflating, the whole system is broken. Like if the euro, the yen, or the US dollar is hyperinflating, one of those three, the whole system goes bust. And then there's a question of, oh, what does this mean for my IOU that I have on BlackRock? Does it mean that I get to have the full Bitcoin? Does the government step in and say, oh, to save America, we need to seize the Bitcoin that we have on BlackRock? We need to seize the Bitcoin that we have on Coinbase. Coinbase is often forgotten, but they have a bunch of Bitcoin. They also have all the BlackRock Bitcoin. Maybe we have to even seize the Bitcoin that MicroStrategy has to save America. And then it's like, oh yeah, I don't want to save America. It's like, I want to save myself. And so better get self-custody for that. And I don't think that's, anytime soon. And I don't think BlackRock is some evil, like I think BlackRock is an evil company, but they don't have they just want to make money. And so, they will not care about your few Bitcoins that you have, but you still have the risk of like, it is in the fiat system and it could go bust anytime. So to conclude everything of that, do self-custody but do it slowly and surely, and be curious and learn along the way, and slowly increase it according to your knowledge and according to your stack size.
It's interesting, like looking at my audience from YouTube, like I have a small audience, but it's all people that are like either older than 40 or a very small percentage younger than 40. And so that kind of shocked me. Like I didn't know, I sort of thought Bitcoin was a young man's game, but I think it's not there yet. I think crypto, altcoins, casino coins and meme coins, they're the young man's game. Every young person is willing to gamble with their future, where it's actually the older people that are feeling the financial pressure, that are going, I'm sick of trying to invest in real estate. I'm sick of trying to invest in the stock market. My retirement fund is not going to be enough. They're actually going, something is wrong with the money. What's an alternative? And Gen Z has not caught up. Is this something that you're finding with your audience? And could you maybe speak into how can we reach Gen Z? And is it just a matter of time for them to start catching up?
Reaching Gen Z is hard with Bitcoin because out of their view, Bitcoin is very boring. Bitcoin is a big asset. Bitcoin is already in the news with BlackRock and nation states buying and big corporations buying. It feels like it is already big and reached maturity, which is 100% totally wrong. But that's the way how they look at it. And so if you are 17 years old and all you have is 400 euros, $400, you can go ahead and save in Bitcoin. But those $400, even if you go 50%, 60% CAGR, they will be maybe $600 next year, which is amazing. Like accumulating that over time will make you a very wealthy individual. But having the marketing that those altcoins and meme coins and those shit coins have of saying like, oh, we will 200x next week because we're getting listed on Coinbase, we're getting listed on Binance. This kind of is more intriguing for Gen Z because they can make with the $400, 4,000, $40,000. And those gambling thoughts are very popular with people that don't have a lot of money, and that's Gen Z. That's that generation, which I'm still in there. Also myself in the Gen Z generation. And that's why we have Bitcoin more popular with people that are 30, 35, 45, around 50, because those people, they have to act financially responsible. They cannot say, oh, I'll gamble my money on red or green and just put everything on number 17. Because all of a sudden you have family, you have kids, you have a wife, you have a husband, you have someone to cater to, and you have responsibilities in life. If you have responsibilities in life and something to lose, you are much more likely to go the least riskiest route and not the most riskiest route. And so we already discussed Bitcoin is the least riskiest route that you can take financially, and it has huge upside. So if you want to sell Gen Z, if we want to sell Bitcoin to Gen Z, probably the best way we can do that is saying, oh, Bitcoin is about to 2000x tomorrow. But that would be a lie, and that won't be happening. The more likely situation is that Bitcoin will keep going with a CAGR of 50, 60%, till it reaches 200,000, 500,000, a million, 10 million, 100 million, and then it just replaces all the currencies, and Bitcoin is the world domination in terms of currencies. This is the more likely timeline, that it just takes like 10, 20, 30 years for it to reach the $100 million marks. So then people are looking at 100,000 euro Bitcoin price, and they're like, oh, I cannot even own one. That's the next thing that Gen Z really hates on Bitcoin, that we have a unit bias. So we want to own 5 or 10 or 100 of the units. If you want to own 100 Bitcoins, you have to have serious money. And there's probably like 5 people in the Gen Z generation that can have like 1,000 Bitcoin, like probably a little bit more, but I don't know, how wealthy they are, some of the 26, 27 year olds. So this is something that Gen Z looks at like, oh, I could buy 0.001 Bitcoin, or I can buy 280 meme coin tokens. Yeah, I want to have one of those. I want to have 280 meme coin tokens because I want to have 280 of something and not 0.00001 of something. That sounds better. So maybe reframing it to Satoshis will also help. But honestly, I don't think we will be successful with reaching Gen Z long term, because Gen Z will always, or like let's say not Gen Z, let's say the group under 25, under 20 will always look for the risky bets, and Bitcoin no longer is a risky bet. And will never be. Like Bitcoin will be the asset that your grandma will come to you and say, here, there's some Bitcoin. You should save in Bitcoin. It's very safe. Bitcoin will be that boring that your grandma, your grandpa, your parents will tell you, if you really want to be safe, do it with Bitcoin. We're not quite there yet. This is like a vision for like 30 years, and Bitcoin will be at like $100 million. And the dollar might not be around at that point. But this is kind of the vision. So for the generation under 20, for most of them, because they are skewed to being gamblers, just young people skewed to being gamblers, because they don't have a lot of money, they will always look at Bitcoin as like, it's too boring. It's not exciting enough. And honestly, it might be unpopular for me to say as a Bitcoiner. Maybe if you're that young, you probably should invest your money in your own skills. You should probably invest all your money in building a business and building knowledge and building experiences. And this should be probably this is probably the better way to teach people how to deal with money if they're young. Because if they can level up with their skills and build businesses, this is the 100, the 1,000, the 2,000x that they can actually do. The 2,000x with some meme coin, it won't happen. You will lose all your money. The $400 will go to zero. But if you invest those $400 slowly into education, and you might want to start small businesses, and it has never been easier to start businesses as of right the fuck now. Like it's you have AI, you have website building. Like, you don't have to have any coding skills. You don't have any marketing skills. You can just ask ChatGPT how to do it, and you can test your way through it. And you might actually find a nice niche that you can actually do something in. I mean, Daniel, Fritz, and I, who founded Microseed, none of us knew how to build a website. None of us knew how to do global supply chains. None of us knew how to design a product. But we did this. We are an engineering company. All of those things are not bought from China and like they were already there and we put our label on there. We designed that. Like that's hand designed by Microseed. And we're actually looking into how we can actually manufacture it all in the US and just buy the aluminum and metals and like do it ourselves completely. And we had no clue how to do that. Daniel did that all with Grok and with just figuring things out. I did the whole website and the payments, and we figured out the global supply chain of how to get all the things to our home so we can manufacture that. Like the boxes that you get from Microseed are put together by us. Like we do that. Like there's not some China guy putting it together and we're just sending it out and putting a logo on there. We actually do all that, and we had no clue of how to set up a website, how to reach out to people, and we just did it. And we now have a business that works and people love the product. And just like 1 year ago, it was not even an idea. Like the idea was not even born yet. So whatever you want to do, you now have the possibility to actually do. And maybe this closes a great loop to like the earlier start of like what you want to do with your life and like how to get inspired by something like that. You can just do things. And in those early Gen Z years and like just like under 25-year-olds, or maybe even under 30 years old, just try things out. Like you can start a business and you would be surprised that people all of a sudden give you money. Like you're like, oh, like how the heck you give me money for a thing that I created, like just like that. And so maybe our better, I don't know if this is the answer you hoped for, but maybe the better thing for us to say to Gen Z is invest in yourself. Build your own skill set. And if you have surplus energy, if you have surplus cash flow, use that to put into Bitcoin. But your risky capital should go into your skills and your business. This will be the best return of investment you can possibly have with 18 years old, with 21 years old, with 25 years old, probably even with like 67 years old, your best return of investment. But with 67, you might want to actually spend down and not like increase your income game, depending on like what you want from life. So this might be the unpopular opinion within Bitcoin to say, if you're under 25, maybe you should invest in yourself and not into Bitcoin.
Yeah, well, my last question was going to be a message to Gen Z, but I feel like that wraps it up quite nicely. Is there anything you wanted to finish off with, or just a chance to plug your Twitter, your YouTube, where people can find you? I've really appreciated this conversation. And so just spend the last few minutes just plugging where people can find you.
People should not find me. Like people, if you're listening to this, I know from the statistics that most people don't follow the host that they're listening to. So if you do something today, make sure to follow Joey and see where maybe on other platforms he also is. Make sure if he ever has a sponsor or a partner, like I don't even know if you have something like that, make sure to buy things only with his discount code and with his links, because it really helps him out to monetize this whole thing. And if Joey has like a Lightning wallet or anything like that, and you enjoy the content and you are someone that is like 50 or 60, maybe consider like giving a young man like Joey with 21 years old a chance and like supporting his mission. So don't follow me, follow Joey.
Hit me with a reverse. Appreciate that. Now you have to have me on your show as a reverse. No.
We will do that. We will do that.
Well, thanks for coming on. I hope everyone enjoyed the show. So yeah, I mean, even what he just said, I recommend you do follow his channel because he's doing a podcast every day. So just find him on YouTube. And yeah, just really appreciate you coming on, man. I look forward to doing this again.
Oh, thank you so much. It was so great to speak with you.
Yeah, awesome. Thanks.
This content is for educational and entertainment purposes only and does not constitute financial advice.